When I first stumbled upon this AI trading page on TradingView, I was absolutely blown away by how accurate its signals were. It's like every move it suggested turned out to be a winning one. If you use it the right way, you've got yourself a simple trading strategy that'll gradually boost your profits over time. Trust me, it's the best and easiest tool to work with. This strategy isn't just good for daily cryptocurrency markets, but is also a gem for stocks and Forex trading. And guess what? I've got all these advanced methods and artificial intelligence is currently laying out. I explain these latest and easiest trading techniques in the simplest way possible through my channel. Make sure to watch the video until then, because if you don't, there's no point to watch it at all. Now, let's dive back into our AI moving average trading strategy. So let's break down the essence of this strategy. There are two proposals on TradingView that play a key role here. The first one is this by Zierman. Employs this smart AI-based k-nearest neighbors algorithm, which I talked about this in my previous videos a lot. It's like this fancy tool that studies and deciphers price patterns. Think of it as your trading detective. It sorts out the price movements into either generation or degeneration. For each price movement, this algorithm analyzes if the price is going up or down, kind of like quality control for prices. When the price adheres to certain conditions, it gets categorized as a generation movement. If it doesn't match those conditions, it's a degeneration. This unique blend of AI methods and KM techniques is versatile fit for various trading strategies and market situations. When it comes to choosing trades, we've got loads of configurations to play out with. The AI has its own preferences in this strategy, and I suggest following a pattern of counting to 10. You'd also want to jack up the data points to 30. Trust me, the change can help you identify strong uptrends with more precision. Look out for uptrend swing in the yellow section above the bars. That's your green light for uptrends. On the flip side, if you see bars diving into the yellow zone at the bottom and the rising is also yellow, that's a downtrend. When the bars are light and above the trend line is a screaming uptrend. This AI-powered approach also acts as a safeguard, ensuring that your trading moves are more effective and secure. It's like having a personal trading assistant that's pretty darn smart. Now let's talk about the special sauce here. When you're ready to pull the trigger, don't rush. Wait for the AI to indicate that it's time to buy or sell. This tool we call the extreme reversal signal by this amazing scripter. Thanks to him or her, by the way. It's going to be your guide. Stick with this indicator and it will give you straightforward suggestions when to buy and sell. You've got the freedom to tweak it however you want. But here's a catch. Relying solely on this indicator might result in some bad calls. You won't be able to catch every opportunity it throws your way. That's why I highly recommend teaming it up with a combo of other tools. It's like combining different ingredients to cook up a gourmet dish. Trust me, using this combo technique, you'll be able to make more informed buying and selling decisions. Now let's talk about timing. Before that, it really matters that which cryptocurrency exchange you're using. I highly recommend when you want to try any new trading strategy, you must backtest it, or if you don't like backtesting, you can just use demo trading, which is available on Bybit. Previously, I made a video about it. I don't want to make it so long, so you can check it out and learn how to do it. But here's the kicker. I have a surprise for you. If you use my affiliate link down in the description, you have the chance winning up to 30 $45,000 worth of USDT just by signing up, doing your KYC, and depositing at least 100 USDT and start trading on it. So what you waiting for? Maybe it's gonna be your lucky day. As I've told you, timing is crucial. You gotta wait for that AI signal to cross a certain threshold first before making your move. Think of it as getting the green light before you hit the gas pedal. Oh, and remember, after you've entered a trade, you also need a clear exit strategy. This is where patience pays off. Give the trade some space to develop. Don't panic at the first sign of a price dip. The market has its ups and downs, so let it play out a bit. If things are looking good, stay put. If not, consider bailing out. It's all about finding that sweet spot. But remember, don't gamble your entire capital on one trade. Play it smart. Allocate no more than 2% of your capital to each trade. This way, even if one trade goes south, it won't blow a massive hole in your wallet. If you want to know more about that, just make sure to watch the video until then because I have a surprise for you. Okay, let's see how this strategy rolls out in action. Now it's time to master the art of steering clear when you need to. First, keep an eye out for a clear trend change. You'll notice a red background with a certain price pattern. Then, wait for the AI signal to line up with the market conditions. And don't forget that ABC boss indicator needs to be pointing at least 90 degrees upwards. Now, this next part is really important. As you're looking for an exit signal, don't rush it. Give it time. Wait for the price to start moving gradually against the trend. It's like watching a slow motion reversal. Remember, we're not aiming for a sudden 90-degree flip in the trend. Instead, look for a gentle shift. You can adjust the positioning a bit if you need to. Sometimes a small tweak can make a big difference. If a sell signal pops up, and it will if you're patient, act accordingly. Follow the same money management rules for long trades as well. And speaking of short trades, let's look at another example. You'll notice these principles apply here too. But hey, when it comes to setting your stop loss, consider giving it a bit more leeway, especially if you're trading over a long period. You can use something like the ATR as a guide. It's all about ensuring you have the buffer to weather the market's ups and downs. Now I just want to show you a couple of trades using this strategy so you can see how powerful it is with the results of 100 times backtesting / forward testing it. And here's my surprise for you. Previously, I made almost an hour of video completely about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do, this is probably for you. So give it a try, watch it, you will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci retracement levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfect. There you have it, a comprehensive guide to this trading strategy. Remember, trading isn't a sprint, it's a marathon. Patience, strategy, and a solid plan can be your best friend in the market. So go ahead and give these techniques a shot, but always remember to trade responsibly and stay informed. Good luck out there.